But what I like to see is that the mid-size and the senior companies are really raking it in at these levels. So therefore, they're looking down, but also the general portfolio managers are reaching out, not just the gold bugs or the silver bugs or whatever.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And as we are living through another exciting day with a $1,800 plus gold price, I'm excited to have Stephen Swatton, President and CEO of K2 Gold, joining me on the show today. A few things I'm excited to get your perspective on, Stephen. Although before we begin, how is everything going with you, my friend?
Yeah, great, thanks. This volatility is working for us, that's for sure. But it is on a day-by-day basis. We notice huge swings in our own stock based on what I consider macroeconomics that probably has nothing to do with us. But yeah, interesting days.
It certainly is, and we'll pull up the gold chart here. You can see it's been hovering around that $1,800 mark. Goes as most assets, goes up, goes down, although now we are at about 1812, let's call it, on the Kitco chart. In the face of it, we still have the Federal Reserve promising that no matter what happens, they're going to print money. So that, I mean, hey, that's what the Fed does. So it's interesting, Stephen. Yeah. We're not far from 1900 anymore, and the all-time high. What do you think about what we're seeing here?
Well, this is an incredible market where juniors like ourselves are suddenly becoming more popular again. I mean, we were the orphan child for the longest time, as you know. We were battling away in the trenches here, trying to put our hand up and get some recognition. But what I like to see is that the mid-size and the senior companies are really raking it in at these levels. So therefore, they're looking down. But also the general portfolio managers are reaching out, not just the gold bugs or the silver bugs or whatever. It is anybody. I've done so many interviews. I've spoken to so many people who, a lot of them have not really paid attention to our sector for a long time and wanting to get our perspective, like the Discovery Group's perspective on where it's all going. And, you know, we have anything from pre-production to, you know, grassroots miners. What does it all mean? But the nice thing for us is, when we see our peers above us doing pretty well, it all cascades down towards us. I mean, they look at us, general managers, that obviously the Sprots of this world are always looking at what we're trying to do. And I look at what's going on internationally and what's causing it. Look, we can't sort of predict what's going to happen next. Who can with the US situation and the Chinese situation? But anything that even smells of some kind of contagion, we get the benefit of it. And it's a situation that we thrive under, whether it's $1,700, $1,800 gold. If it goes north of that, we're going to get back to those heady days again, back in the early 90s, when it was anything with a smell of gold got some love. You know?
Yeah, I think people are feeling it and getting excited because I think part of it is that you don't need a PhD in economics to see that. I mean, they can't raise interest rates. I mean,
yeah.
Could you imagine the U.S. debt load with a higher interest rate? I mean, we sit here talk every night, 8 million and one reasons of why the Fed is going to continue printing. And as you quite correctly pointed out, gold stock's doing quite well. Here we see we're, had that dip in March, but at some new highs. This is the 5-year chart. Still a ways to go to get back to 2011, although it's interesting. We're not, we were looking at the GDX here, was over 65 in 2011, although the gold price is only about $100 away. So like you said, some things to be excited about. And perhaps could you somehow put in perspective, because there's a lot of people who are new to this and just coming into the gold market for the first time, but explain the leverage that these miners get and why even 1700 versus 1800 is a bigger deal than it sounds.
Well, the leverage they're getting as a result of that is because their costs are much lower, the returns are much higher. We can, they can spend more on exploration as well. So what they can do is they can leverage their, if you like, their profit, their margin book to actually find more of the resources that they want to look for, even within their assets and other assets. It gives them the leverage also to be able to have, when you're talking of leverage, it's at different levels politically as well. I mean, you're in a place like we are in California, not exactly where, that's where the gold rush started. Our leverage, if you like, when we were 2 years ago looking at this and to now might be slightly different. We might be able to go in and have a little bit more of a hearing with local politicians, whereas 2 years ago our leverage was pretty small. But I know the leverage you're talking about, but it's leverage at different levels. Like if it goes to 1900, it just exasperates it even more that the space that we're in is even of more importance to the local economy. Like there's even talk on one of the local newspapers that I saw is like the best way that you could leverage the importance of our part of California is to let the miners, instead of going overseas and mining overseas, leverage what we have, get the revenue to the local economy. And instead of buying copper from overseas, why not buy copper locally, but keep an eye on those guys? Then the local economy has the leverage over us to make sure that we abide by the rules. But it's kind of, if we're going to a more local world or going to an international, rely on overseas economies to provide what we can actually deliver back home. Like in California, they kind of have everything. And Nevada, if you join in the southern states, you can do everything without having to go overseas. You can probably mine most of it. Base metals might be a little bit of a challenge, but they've got lithium, they've got copper, they have that's in Arizona. You have the gold in California. Gold, it's a product that's not only used for currency; it's used in a lot of electronics as well.
Yeah, and as you were saying that, I was smiling, imagining. I wonder what the conversation would go like if you're talking to some government officials and you're showing them the local revenue projections, not even of today, but here's what your cut looks like at $2,000 gold. Here's what it looks like at $2,500 gold. And wait, just because Ben Bernanke and Jerome and the gang promised unlimited, and they're probably going to find a way to top unlimited, which is I can't. I'm getting to see how that plays out. But I mean, they're almost guaranteeing that we're going to see some big numbers. So it's just interesting to imagine what's possible, especially with the way things trade with momentum once that price of gold gets 1,900, 2,000, and you really get some attention on it.
Yeah, no, absolutely. You're right. It's going to be a different world altogether. And I mean, I think we have to have a little bit more of a seat at the table than we've had up until now. Because, look, if you're living in states, I think you have to balance the books. Each county has to balance their books. What other options do they have in certain of these counties than looking for mining options? I mean, in the part of the world that I'm in, there's very little agriculture. There is some. There is tourism, which is more than 50% of the revenue. If it's not mining, what is it going to be that brings in the revenue? 1.7% of the local county is in private hands. What other options do they have?
The backup plan is that the Fed's going to start buying Teslas. So hopefully we don't get that far. Although last one before we, or actually I have two more for you, and I appreciate you sticking around. In terms of the investor market, I know you're talking to funds, investment advisors, investors all day. Seems to me like there's now a lot of money starting to come in. I mean, even changing almost by the week. That's what I get from the conversations I have. Anything you could touch on there?
You mean in terms of investing in juniors, the amount of money?
Yeah, that we're seeing just new institutional money entering the sector now. Is that the feeling you've gotten too?
Yes, absolutely. And if you're at a group like the Discovery Group here, we fortunately have our tentacles in quite a lot of the different areas. And we are just opening up into some of the European markets, particularly the Germans are showing a lot of interest in the type of product that we provide. But we are finding that there's an opportunity here to reach out to the generalists, and the generalists also, but because we have the Discovery Group have a slight reputation for, I would say not a slight, a reputation for delivering on what we say we're going to do. It's easier for us to open the doors, and yes, definitely, there's a wider audience than we had even, I would say, even than a month ago these
Yep.
days.
And Stephen, just before we wrap up, could you just let folks know exactly what the Discovery Group is? And also, if you could touch on real quick, you had some exciting news about the K2 Gold project that
Sure.
you've been running, and if you let folks know about that.
Yeah, very briefly, Discovery Group is 8 companies. We have a sort of shared belief that it's not shared boards or anything like that. It's a shared belief that good people and good management actually fosters other companies to be better. So what we have is we have Base Metals Gold, we have a pre-production company, and Great Bear, which is our flagship right now. This time last year, I think they were probably about $3. They're now $15. We're a group of companies that John Robbins and Jim Paterson put together. We all share an office and a similar belief in quality people without any, for want of a better word, without any shenanigans going on in the background. We're not paid as a management fee. There's nothing going on. It's just like-minded people trying to do better, is one way that I put it. Now, K2 Gold itself, we're in California, and we're trying to look at and explore a gold resource in Southern California, which has been drilled in the past by BHP and Newmont. They only put 35 holes into it, and it's near Lone Pine in South. On the screen, you can see there. It's 240 kilometers northwest of Las Vegas. It's in semi-desert, and there already have been resource projections put on it by both BHP and Newmont, which I'm not at liberty because they're not 43-101 compliant. But we wouldn't be looking there if it wasn't of all grade type material. And we're about to start a drill program, 16 holes at 4 sites, and we hope to be on the ground by the end of August. But it might be a little bit optimistic because of the current COVID situation. But yeah, very exciting property, oxide gold at surface.
Yeah, it's exciting news. And folks, fortunately, Stephen was kind enough to stick around and give us an overview of his project. So if you'd like to hear more about that and some of the things that are possible there, fortunately, it is coming your way right now.